This video I'll be talking about how to draw key levels on higher time frame. So I'll be drawing my key levels on the weekly time frame because the higher the time frame, the stronger the level. So if you are drawing key levels on higher time frame, it's going to be much stronger than those that are drawn on the lower time frame, like the 4 hour and on the 1 hour time frame. So there are two things that you need to consider when drawing key levels, or let me say when drawing support and resistance level. So the first thing is you need to look for an area in the market where price got rejected from multiple times. So you need to look for multiple rejection in the market. So the more touch a level has, the more stronger the level will be. So look for an area in the market where price touches multiple times. Then the second one is you need to look for an area where price move away from significantly. So a swing high or a swing low in price. So an area like this, when price go to then move away from significantly like this. Some people might be calling this level a demand zone. So an area like this where price move away from significantly. So this level can be considered a strong support level. So those are the two things that you need to consider when drawing support and resistance level. So in this video, I will not be drawing it. I've already drawn my key level. So I'm just going to be talking on how to draw it and how to identify those levels. So to identify major support and resistance level, like I said, you need to look for an area in the market where an area the price touches multiple times. So it can be like a minimum of 3 touch. So an area where price touches multiple times and an area in the market where price move away from significantly. So swing high and swing low. So like this zone, when price got here, price move away from this level significantly. So this level can be considered a very strong support level or a demand zone. So and this level has a minimum of 3 touch. So this was the first touch. There was a touch here. If I go to the lower time frame, like day time frame, but I'm not going to count this level. I'm not going to count it. And so I'm just looking at the obvious one, that the levels that I can clearly see on the weekly time frame. So on the weekly time frame, this was the second touch. So after price got here, price bounce off it and then start moving higher. So this was the second touch of the level, and this was the third touch. As you can see, when price got here, this level was acting as a resistance at this region. So, and as you can see, when price got into this level in the future, price respects it. So when price got here, this level was acting as a supply zone or a resistance level, whatever you might call it. So this level is acting as a resistance level at this region. So when price got here, price move away from this level. As you can see, price move away from it significantly. So now this can be considered a very strong resistance level. So and this was the second level. So I said when you are drawing your key levels, look for an area in the market where price touches multiple times. So like the minimum of 3 touch. So this was the first touch here, this was the second touch here, and this was the third touch. As you can see, when price broke above this level, then came back down to retest it, price moved away from this level significantly. Like I said, I'm on the weekly time frame. So you can imagine how this candlestick are going to look if I'm on the 4 hour, or let me say on the daily time frame. So the movement here was significant. So this level can be considered a very strong support level, or you can call it a demand zone, but I'm just going to be calling it key levels because it's acting as a support and resistance level. So if price is trading below it, it's acting as a resistance level, and if price is trading above it, it's acting as a support level. So I'm just going to consider it a key level, not a supply zone and not a support or resistance level, but a major key zone where price will go to and then start reacting from. So this level are areas in the market where price will go to and be reacting from, either price heading to the downside or got into this level and heading to the upside. So price is going to react to this level no matter what. So after I draw this key level based on these touches here and how price moved away from this level significantly, then when price came back into this level, as you can see, when price was trading below it, when price came back to it, this level was acting as a supply zone here, and also here when price got here, price moved away from it significantly and then starts trending to the downside. So this level can be considered a very strong support level, or let me say a very strong key level. So to the next level, so this was the next level around that. Okay, so this was the next level here. So the reason why I draw this level is because it's the way how price reacts from this level. So I found this level and I see that when price goes here, price starts moving higher. So this was the first touch. This was the second touch of this level. As you can see, when price got here, price was dropping around this region. But when price got into this zone, price starts heading higher, as you can see. And the movements, like how price move away from this level, was significant. Price does not just stop around this region and then starts coming back down. Price move away from this level significantly, as you can see. So this was the first touch, second touch, and there was a third touch around this region. So this was like the third touch of this level. Though price broke it, but on a lower time frame, like the 4 hour or the daily time frame. So this was the third touch. And when price came back into this level again, as you can see, it was acting as a support level around this region. Then price broke it to the downside here. So when price broke it to the downside, price came back to retest it, then start dropping again. So this key level, after drawing these major key levels on higher time frame like the weekly or on the daily time frame, you just need to leave the level there. Even if price broke the level either to the upside or to the downside, just leave the level there, because price is still going to react to that level. Even if price broke the level to the upside or to the downside, price is still going to be respecting all the levels. So as price broke above it now, if let's say price come into this zone and start rejecting to the downside, if price still got into this zone, price will still react to it, either go to this level, start heading higher, or break it and retest and then continue heading lower to this next level. So this was the last level here. As you can see, I said earlier that to identify a very strong support and resistance level, you need to look at an area in the market where price moved away from significantly, and this was the good example of it. As you can see, when price got into this zone, this level was acting as a demand zone, like I said earlier. So this level, the reason why I say that is because when price got into this zone, the movement of how price moved away from this level, it was significant. Price was not just creating small bullish candlestick. Price was creating all this huge candlestick and on the higher time frame. So this means that this level, when price got into this zone, there was a strong support level here, and some people might be calling it demand zone, whatever. So now when price got into this zone, this was acting as a strong support level. Now if price can come back down and be trading below this level and price come into this level, there is high chance that if price got here, price is still going to react to this level. So that's how to identify major key levels on higher time frame. I'm not going to dive deep into how to draw it and how to draw that, but with this little example, and you can, like, you should be able to identify how to spot this key level. Just look for an area in the market where price move away from significantly, or an area in the market where price touches multiple times. So that's how to identify major key levels on higher time frame. Just look at the obvious levels where price move away from significantly, and those areas must have like minimum of 2 or 3 touch. But if price moving from a level like this that does not has a minimum of 3 touch, as you can see there, this level just has this, just ordinary this 1 touch and then start moving higher. So this level is still considered a very strong level because of the way price move away from it. So this level is considered a very strong support level. So that's how to identify major support and resistance level, or you can call it major supply and demand zone on higher time frame. So the higher the time frame, the stronger the level will be. So you can compare this level to the levels that are drawn on the 4 hour or on the 1 hour time frame. It's more stronger than the levels that are drawn on the lower time frame. So that's it, guys. If you find this video helpful, don't forget to like, subscribe to the channel and share the video, so that it will keeps encouraging me to be making content like this every week and all that. So if you find it helpful, don't forget to like, subscribe to the channel. So that's it for this video. Bye.